if you're ready to stand on the line, if you're ready to fight back and serve it to the criminals trying to enslave you and steal your wealth through monetary creation and exorbitant taxation, you're in the right place. Welcome back to another edition of the Prepper Recon Podcast. Whether your plan is to bug out or bug in, CampingSurvival.com has all of your preparedness needs, including fish antibiotics, long-term storage food, water filters, bug-out bags, and first aid kits. Use coupon code PrepperRecon for 5% off your entire order at CampingSurvival.com.
When disaster strikes, it's too late to prepare. PrepperRecon.com offers MOLLE-compatible individual first aid kits for your home, auto, or bug-out bag. These kits have everything you need to address a traumatic injury, including an Israeli battle dressing, quick clot, EMT shears, suture kit, Steri-strips, tourniquet, ACS chest seal, tough strip bandages, gauze, and so much more. $89 includes shipping. To buy your individual first aid kit, go to PrepperRecon.com and click the store tab at the top of the homepage. Order today before it's too late.
Today's guest is Jerry Robinson. Jerry is the host of Follow the Money, and he's the author of Bankruptcy of Our Nation. I don't think there's anyone else of whom I can say Prepper Recon Podcast might not be here if it wasn't for Jerry's show. So it's with the highest honor that I say, Jerry, welcome back.
Mark, it's a pleasure to be here. Thank you so much.
Absolutely. Now, what's the biggest thing on your radar right now?
There's quite a few things. One of the hot topics for me for a long time, Mark, as you well know, has been Saudi Arabia. Saudi Arabia is you just got to hand it to them. They have really pulled the wool over the most American people's eyes, and they have us really focused upon Iran. In fact, many people don't know that the second largest owner of the Fox News network, the actual parent company, News Corp, is a Saudi royal. The Saudis have a terrible human rights record. We have the latest evidence we've seen is that they actually played a role in the Boston Marathon bombing. They're now the world's largest arms importer. We know that they already have nuclear weapons in Pakistan, waiting for delivery as soon as Iran, ever decides to begin creating nuclear warheads. And now the latest King Salman, who just recently came in, replaced the old King Abdullah, has basically said that his greatest priority in foreign policy is to see the Palestinian state become a reality. And so he's putting tremendous pressure upon the region, especially with Israel. And they're funding ISIS. I mean, so there's this huge list. Rand Paul recently came out and called for a boycott of Saudi Arabia, which is amazing. We really need people in Washington to have the backbone to stand up to Saudi Arabia. It's really a Trojan horse in my mind. So that's probably at the top of my list. But, there's a lot of perennial issues, Mark. I mean, the things that really concern us is, of course, America's retirement crisis. I can't tell you how many people we hear from on a regular basis who are just getting started, contributing to a retirement plan. And I don't want to shame them because, it just is what it is. We don't save enough here in America. But the fact is we see a lot of people who are not putting enough money back, and they don't have enough income, and they're living on the edge of bankruptcy, and they're sailing into retirement, and they think the government's going to take care of them. And our government is not in that kind of place like it was back in the 60s and 70s. I mean, it's not in a place now where it can take on the huge tsunami of retirees, 10,000 every single day retiring. It's just really going to be tough. So, these are some of the things that are, on our hot list. And then I think probably one more just to throw out would be the, what's happened in China, this Asian Infrastructure Investment Bank. And we just did a show on this on our website, latest podcast, about how Europe has, in essence, turned to China against the West, against what I should actually say the United States, because Asia has developed this challenger to the World Bank, a challenger to a Western lending institution to invest in Far Eastern infrastructure projects. And, of course, this is where a ton of money is going to be made over the next several decades, investing in the infrastructure, building out the telecommunication networks across China and across the Far East, transportation infrastructure, into simple construction, building. I mean, there's still so much that needs to be done across this region. And the World Bank and the Asian Development Bank, based out in Manila, were planning on earning the lion's share of all that money through interest. The banksters, that's how they make money. Well, Asia, or China, has developed now a competitor to the World Bank, and it is now getting countries like Britain and France, Italy, Germany, who is basically at the helm of power in the EU, all turning now, and even countries like South Korea are considering, and Australia have already considered to be a part of this new bank. This is a tremendous blow to U.S. hegemony, and it's just another sign of the crack in the facade that the U.S. is the sole superpower over the world. It's going to be very soon that people are going to finally come to the realization that this hard landing in China, even if it does happen, which they continually talk about, even if it does happen, the United States is still on a downward path and China is still on an upward path. So there's lots of things to talk about, Mark, and I want to congratulate you on the latest book. I actually had a chance to go back and look at some of the books, and I saw the one that you had put, the forward, the dedication to me and others, and I wanted to thank you for that. But I wanted to encourage you because you've done a great job with your podcast. You've done a great job with your books, and I think it's just wonderful, your story. You have a great story. I'm sure you've shared many times on your show.
Yeah, Jerry, and I really appreciate the influence that you've had on all that. Now, I'd been trying to get some information about the Asian Infrastructure Investment Bank from the mainstream media, but I couldn't really seem to find anything, and I was starting to think that maybe that's because it's just not as important as whether Bruce Jenner's dress is gold and white or blue and black. Did I say gender? I meant to say Jenner.
Well, you're right. I mean, when you go to, and I think it's funny, anybody who's in this side of the business, I mean, we're talking about geopolitics, we're talking about economics, and there's just not a lot of interest in this stuff for the average American. And that's understandable, I guess. I mean, there's a lot of people who are news junkies. They want to get lots of news, but they really kind of digest it at the pace of the mainstream media. The mainstream media has really taught people how to kind of have snack food when it comes to the media. So they never really get anything in depth, and that's what you're talking about. I mean, there's not a lot of great in-depth stories about this. I'll tell you what's also lacking. There's no in-depth stories at all on the Transatlantic Trade Investment Partnership, which is also known as TTIP, is this U.S. and EU trade deal that's going down behind closed doors, thanks to the Republicans in the Senate, who have been extremely demanding that all of these talks remain completely secret, with no leaks, and they don't even want the American people. In fact, the House of Representatives doesn't even know what's going on in these talks. The same thing happening between the United States and the Far East with the Trans-Pacific Partnership. These are two regional trade talks which are going to be devastating to both us and to other nations, and they are going to be signed in secret. They're being arranged in secret, and it's a travesty. And so many of the most important things that are happening, the in-depth reporting is missing. But you're right. If you want to find out what happened to Lindsay Lohan yesterday, I'm sure you could find that out pretty quick.
It's time for a quick break, and we'll be right back. The dollar's lost over 90% of its purchasing power since 1971. Silver, on the other hand, has proved to be a very stable form of wealth preservation over the years. And where do you buy silver? Silver.com, of course. Silver.com offers fantastic prices on silver and gold. Check out Silver.com today.
Are you prepared to defend yourself and your loved ones in extraordinary circumstances? Do you know the one piece of gear Special Operations soldiers rely on to gain an unfair advantage in the field? Are you interested in honing your firearm skills based on lessons learned in actual gunfights? In desperate times, ready men rise to the occasion and come out on top in difficult scenarios. With 73 years of Special Forces experience, the Ready Man cadre blends cutting-edge tactics with the most current prepper skills into each online episode and live training event. Go to ReadyMan.com to learn more and sign up for a free Special Forces designed hostage escape card that you can easily carry and defeat locks, cut through ropes, and pick your way out of handcuffs. Again, that's ReadyMan.com to sign up for your free Special Forces Design Hostage Escape Card.
Now, back to the Asian Infrastructure Investment Bank. What is that going to mean for the dollar going forward?
Well, the dollar specifically, not much. I mean, not at least not initially. It's more of a perception initially. It's this psychological understanding that the West actually has a agile and legitimate competitor on the world stage for institutional lending to nations. And now it means that nations around the world have a choice. They have a menu. They can say, I can either borrow from this bank or I can borrow from this bank. No longer is it just the United States or one of its proxies. Now, China will be able to earn some of that market share. And that market share is one of the ways that the West has been able to gobble up much of the world's wealth. It's also what's caused a tremendous amount of inequality globally. So, not that China is going to do it any better, but at least these nations now are going to have a choice in the matter of, who's going to rob them. Now they have two robber barons.
And there's been some people like Martin Armstrong that have made some really bold statements about a crash that might be coming this September. He did call the collapse of Russia in the 90s and the U.S. market crash in 1987. Any comments on that?
Well, I think September is no doubt going to be a skittish month for investors. I think there's also just a general fear that this market has simply gone too high. And I'm certainly of that persuasion. I mean, this is going to end badly. When it goes down, it'll be worse than the 2008 financial crisis because it's bigger. Many people don't think about how this bubble was inflated. It came through the most Herculean, unprecedented monetary stimulus in world history. There's never been anything quite like what the Fed did with QE1, QE2, QE3. Really drove our money supply to a new high, drove a lot of money into financial institutions, which then held the money, and it caused all kinds of massive distortions in the markets, the financial markets. So when this thing unwinds, it's going to be very painful. Now, timing is one of those things that is very difficult, and as far as September being the month, well, sure, it does often happen in September or October, at least the big crashes when we go back. Sometimes March. I mean, March has also been a month. But, September and October have been traditionally the months to watch for. So I think, somebody who throws a dart and calls that month is probably going to have a higher probability than somebody who calls, say, June or July. But I think it's hard to know if it's going to be 2015, is it going to be 2016, but we will hit a major stumbling block. And it's hard to know what that's going to be. Let me give you a couple of ideas of what that might look like. One would be just a natural deflation of the balloon, investor exhaustion. And this is something that we've seen across the board for the last several years, is that as these markets have gone higher, volume has consistently gone lower, not just because the prices are higher, but because there's actually a slowdown in demand for equities at these levels. And this is unfortunate for the big financial institutions and the smart money, because at the top of the crash or right before the crash, they like to get out because they're often able to see the writing on the wall before everybody else does. And so they like to sell, and they need people to sell too. Well, we really haven't got that massive amount of volume into the markets. So I would expect that when these big institutional investors begin to sell, they're going to do it into some strong volume, and that means that the financial media is going to somehow need to talk mom and pop investors into going out and buying stocks. They're still not real excited. So, I think they can delay it for as long as they need to, barring some sort of black swan event that comes out of nowhere. A couple of those could be things like Saudi Arabia, pulling the plug on the dollar. Saudi Arabia has been getting a little bizarre lately, so they could pull the plug on the dollar. You could see Asia come out with a gold-backed currency. You could see Russia and China come together with a planned, proposed joint currency that might be backed by some measure by some sort of natural resource like gold. So, several things like that could happen, and that could, spur the downward spiral. But I really anticipate to see some more mom and pop investors get into this market, because that's really how these things crash. You really need that final spurt up right before the crash, and that's been lacking. There's not a lot of volume coming into these markets. Wall Street Journal even has been talking about that quite extensively lately, indicating that the banksters are wanting to get more money in these markets, and now they're using the mainstream outlets to push their narrative.
So they're kind of waiting for the hogs to slaughter.
They are. They're waiting for the hogs to slaughter. And normally, in normal markets, we would see, like in 1929, we see this massive increase. Everybody and their brothers buying stocks. Remember, even those who remember the dot-com bubble, where everybody was interested in PE ratios and everybody was talking about the latest internet stock. I mean, you don't see that today. That's not really what's happening. It's beginning. You can begin to kind of feel it. But this has been a tremendously hated rally. And people like me who, trade every single day, we've been able to make money from this because we've been trading the trend. And so it's been good to us. But to the average person who is not really an investor, or maybe they don't want to, they don't want to risk money in the market, there's really been nowhere else to go during this time period. Everything else has kind of, fallen short of the returns that we've seen in U.S. equities, and that will come to an end. But as far as dates, I mean, who knows? That's one thing. My crystal ball broke a long time ago.
Now, where do you think all of this money is going to go when it comes flowing out of stocks? What do you how do you feel about real estate? Do you think it's going to take a hit when the stocks take a hit, or do you think that maybe some of the money is going to go in there, because the bonds are already at record levels, and the yields when you factor in inflation are already negative. So, where do you think this money is going to go?
Well, it certainly could go to bonds. I mean, that's just real traditional. Back to your question about real estate. I love real estate. I love affordable real estate. And I think that's the key. There's a lot of people who speculate on I'm not talking about going out to out to your neck of the woods, for example, out in Florida and buying a, beachfront condo. I mean, that's not the kind of real estate I'm talking about. I'm talking about a real affordable bread and butter, 3-bedroom, 2-bathroom house in a plain Jane working man's neighborhood, that you can buy. Maybe a little, maybe it needs a little TLC. You buy it, you dress it up a little bit, put some lipstick on the pig, so to speak, and then you put it in the paper or put it in the in Craigslist, rent it out, earn yourself $100 or $200 profit every single month, and you have as many of those as you can possibly get, because those types of investments, even in times of tremendous turmoil, will continue to provide an income stream, because they are a tremendous store of value. And they provide you a nice, steady income that you can depend upon. So I love cheap, affordable real estate in really good markets. And, I'd say for the most part, the Midwest has really been the primary place. Texas, where I used to live, great real estate prices down there. I live in Arkansas now, and real estate prices here are fantastic. Oklahoma, Louisiana, some of these areas have, very good, reasonable real estate. But you get out on the outer edges of the coasts on both sides, and you find that prices have really crept up quite a bit. So that can be a challenging thing for people who can't access real estate. Obviously, at your foundation, having some precious metals, physical precious metals, I believe, is one of the most important things that an average individual can do. Maybe not throughout history, that would have made sense, but in our era now that's completely globally debt-based, you have to have something that's tangible that the central bankers consider money. Central bankers are buying gold like mad. They still are. The pace is outrageous. And so you have to ask yourself, if they're buying it, why wouldn't I have a little bit of it? I mean, they're the ones who are controlling the whole system. So I think it's wise to have that as a foundation. Also, I really think that so many people out there have so many gifts inside. Like you, Mark. I mean, you were listening to our podcast. You have this idea, and you say, I think I'm going to start a prepping podcast, and you provided value to the people. Many people don't understand that, money comes to value. Wealth creation is value creation. And so there's so many people out there who have great value on the inside. They have a book in them, or they have, a podcast in them like you do, or they have some other gift to share. Maybe they can design, clothes, or maybe they can design something else, or graphic design. Who knows? The point is that everybody has their own gift. And if you can learn to take that gift and learn how to hone it and make it to be perceived as valuable in the eyes of others, then you don't have to worry about money. Because if you provide value, then you'll always have enough. And what many people misunderstand about that is that they've been taught that they have to go get a job, right? So you go to school and you go to college, and then you got to go get a job now. So you never get told you got to create value. You're told you got to be a good employee, you got to show up on time, you got to, treat your boss kind. But the value creation component is strangely missing. We're not really told about that. So I think the biggest thing that people can do is invest in themselves and learn how they can create value for other people if they truly need more money. And that's how they will earn more money, is when they become more valuable.
And if you do see something coming like an event that's going to affect the dollar, and you were going to get into real estate, and you had the option of paying for a property all cash or with a mortgage, would you hedge it with a mortgage right now, or would you go all cash with the interest rates at the level that they're at right now?
I think some people consider this to be hypocritical because, I constantly talk about how the debt-based system is, it's not good. But in this environment, you really have an incentive to use debt. I mean, it is a debt-based monetary system. And so I know some people say, well, don't use debt. Well, it's like saying don't drink water. I mean, it's everywhere. The money in your pocket is debt. It's a form of debt. So, money is debt surrounds us. So a mortgage does not concern me for rental real estate. In fact, I would prefer to have a mortgage as opposed to pay cash. In fact, I can tell you this. I cannot think of a single instance in my entire investing career, real estate wise, or an instance in the future. I cannot even think of a scenario where I would think that paying a property in full would be the best idea. I can't even think about that in any case that I've ever seen. I can never imagine that being the very best economic decision. Now, it might be the best to help you sleep at night. If the mortgage bothers you and it gives you good sleep, well, that's probably a legitimate reason. But if economically speaking only, no, I can't imagine a reason as long as you stick with a fixed long-term mortgage. Some people say, well, I'll do the 15, not the 30. Well, that's silly, because if you get the 30 and you hit hard times, then you have a lower payment. If you take the 15, then you have to always make that payment. And that's unfortunate because, with the rental properties, you will have ups and downs. So you want to have a cheapest possible mortgage as you can. And so by having the 30-year, if you will simply find out what the payment is on the 15-year and you pay that to the 30-year, you'll almost always pay the mortgage off in about 15 years. So instead, focus on getting a 30-year note. This is what I would do. I would go out and get a 30-year mortgage, and I would find out what the 15 is if I wanted to pay it off early, and I would pay the 15-year amount on the 30-year mortgage. And then if trouble hit and I couldn't make that payment every single month, then I could always just go back to paying the original 30-year amount, and that would help out in a time of crisis for me. That's how I would approach it.
And then you can maintain your cash position by doing that as well.
Yeah, and as far as a dollar crash, I mean, of course, the dollar is due to begin its downward trend. We've seen since July, and this is why I don't put a whole lot of stock in predictions. Mark Stansberry Publications was out. I guess it was at the middle of last year's. It was in summer. And they were promoting this idea that on July 1st, the dollar was going to crash. And there were a lot of people who took that seriously. They began, getting out of the dollar. They began to take, serious hedges. And July 1st, no kidding, July 1st is the day that the U.S. dollar began its current uptrend to the day. I mean, it wasn't even July 2nd. It was July 1st. And the dollar begins this massive upturn, which has now risen, 30 to 40% against some other assets around the world. And so we've been long the dollar. Now, that may seem strange. I'm short the dollar long term, but in this near term, I have been riding the dollar higher, making money as it goes up. This is what we do called trend trading. So when an asset goes up, we invest in it. When it goes down, we short it. And that's what the same thing we're going to do to the United States stock market.
And you mentioned very briefly about what the Saudis could do to the dollar. And of course, for the folks that have been following you for a long time, they know about the petrodollar, and they know about the deal that our good friend Henry Kissinger cut with the Saudis to have oil priced in dollars. And of course, he's a distinguished member of the Bilderberg Group, CFR, and Trilateral Commission. And he wrote a book last year called World Order. So that sounds a little conspiratorial to me. But anyway, not to get off on a rabbit trail, can you just briefly explain what the Saudis could do to the dollar and how that would play out if that's a way they decided they wanted to attack us?
Well, the Saudis are fairly punitive in their response. The Saudis so far have really enjoyed the graces of the U.S. They've enjoyed the graces of the West, despite the fact that they suppress women, despite the fact that they enslave many people, despite the fact that they're one of the top exporters of terrorism, despite the fact that they're the world's world's largest arms importer, and despite the fact that they seek and have nuclear weapons. Despite all these facts, the West just still gives them a pass, and it's because of what you just said. It's because they price their oil in dollars. Iran doesn't want to. That's why they are lit up in the media constantly. So the Saudis we've been in bed with the Saudis now for a long time, and there was just recently an explosion between the Saudis and the Swedes. Sweden was pointing out Saudis' atrocious human rights record, and finally did something about it and said, look, we're going to withdraw, and we're not going to sell you any more weapons until you do something about your horrific human rights record. Right? We're just not going to do it. And the Saudis shot back and demanded that the diplomats from Sweden come down and meet in Riyadh. They met, and apparently they restricted all Swedes from having any kind of business dealings in Saudi Arabia and cut them off very quickly and made a real boisterous noise about it, indicating that they don't want to be bothered like this. They don't want to be called out on their record. So now you have Rand Paul, who's running, and now he's talking about how we need to boycott the Saudis. This is going to be a hard sell to the American people. The American people don't get it. They think Iran is the danger. They don't understand that the Saudis are the ones who already have the nuke and already hate Israel. I mean, so it's like the American people are just blind to the Trojan horses in front of them. The way the Saudis could do this is they would simply move to a diversification of how they accept currencies for their oil. So what they would, maybe an example headline would look like, you may wake up in the morning one day and see that Saudis are now accepting euros for oil. They say something like that. It won't say, that they dropped the dollar or whatever, but they're accepting euros. Or maybe they're accepting gold, something else. In other words, it dilutes the demand for the dollar. That's the kind of devastation that Saudi can wreak upon the U.S. And it may not seem like it'll be a big deal, but just give it a few weeks and you'll see how it all begins to play out. And currency traders will know instantly to short the dollar when they see that. That'll put downward pressure on the U.S. dollar.
Speaking of currency traders, currencies are usually a very stable form of wealth preservation. But over the past few months, we've seen the ruble lose 30% in a day. The Swiss franc jumped 30% in a day when they pulled their peg from the euro. Then the immortal U.S. dollar lost nearly 4% from peak to trough after last Wednesday's FOMC meeting. I think it quickly regained all the ground that it lost. But that's a really big swing for one day, especially for the dollar. Does any of that bother you?
It does. I mean, we've been tracking global currencies now for quite a while, and we have a global currency monitor service that we provide, because a lot of people want to hold, as you said, they want to hold currencies besides the dollar, and they want to know which ones that they should hold. Well, over the last, since last July, we kind of rate them on a yellow, red, and green light system, and the dollar has been the only green, with the one minor exception of the Chinese yuan, which is still kind of floats by the dollar, but or attached to the dollar. But overall, we've seen a pretty strong decline in everything else but the dollar on the global scene, and that's been concerning. Sure, I'm concerned because I find all of my current currency holdings are in the dollar, and I can't remember a time over the last several years where that's been the case. Normally, I hold maybe 50% dollars, or I short the dollar, and even in some cases. But lately, it's been I've been holding. Right now I'm holding 80% U.S. dollars, and I have 20% in shorts on euros. And it's been a long time. So I don't like being that fully exposed to the U.S. dollar for such a long extended period. It's coming up on a year now. It is concerning, but it'll change. The U.S. dollar will eventually hit a peak. It'll experience downward pressure, and its long-term downtrend will continue. This is just a brief blip in a very extended, multi-decade downtrend that the U.S. dollar has been in for a long time.
And Jerry, for the folks just waking up to all of this, where do they start?
Well, I mean, there's a lot of great resources. I mean, since we first started back, in the day, when we first got started, I would say there's probably, there's just a handful of sites. Today, there's a lot of great sites out there. What I would say to people, and I think, Mark, you know this, especially from listening to our podcast for a while, is that, one of the things you want to avoid is a lot of the sales opinion, the sales hype. The mainstream media is constantly selling. I mean, most people don't realize that half of the news out there is just a PR release. I mean, it's not even news. It's just a pre-written PR piece, and so many people they find their lives kind of driven each day by what the corporations are putting out, and they begin to acquire the same taste and preferences that the corporations want them to have. And I think the very first step is to kind of detox from that. The way you do that is you begin to take a look around you and begin to think about, what am I producing? What most people find out if they're broke is that they're not producing anything. They're only consuming. They've become expert consumers. So for the person out there who's just woken up, or maybe recently woke up, and they want to take a change, I mean, besides, some people just wake up and they just get angry. And they just want to be mad about everything, and they want to learn more and more, but they don't apply. They don't actually do anything. Well, for people who are ready to do something about it, you need to begin to think more like a producer and less like a consumer. You live in a society that will pay for value. They'll pay for things that are produced. And you also live in a society where very few people around you produce. So you do have an advantage in that perspective. Plus, with the internet, the playing field has been leveled, as you well know, Mark. I mean, you started a website, you started a podcast, and you found out that there's people out there who want that kind of message. There's many people out there who desire this kind of information. And so I would say, first of all, wake up from the consumption trap. Try to think outside the box when it comes to making money. Begin to try to create multiple streams of income. Look for ways to trade your cash for cash flow. Also, I would say that getting that foundation of gold and silver is also very key, would be a very important first step financially, would be to lay a foundation. If you don't have any gold or silver that you can hold in your hand, just get some. Start small if you have to. Just get an ounce of each and just hold on to them, and then maybe add as you can. Or if you have a lot of money that you can diversify into metals, that's great. Not everybody has money. So just do what you can. And I think gold and silver in the long haul will remain the beneficiaries of all this poor monetary policy that we've seen here in the U.S.
And gold and silver are both at or below the cost of production right now. So you think right now is a good time to start dipping your toe in?
Well, I think that, any time for long term is a good time. For people who want to be real strategic about their entry, we do provide some pretty cool signals on our website where you can actually get, when as soon as the trend begins to move up, you get a signal. It's a buy signal. Anytime the signal begins to go down, you get a signal so you know. If you want to be real strategic about it, I would say try to find a timing service to get in. But if you're just going to buy for the long haul and you're saying, I just want to have some of this, yes, I think now, 10 years from now, we're going to look back and you'll be able to tell people that you bought silver, below $20 an ounce. And people may or may not believe you. Silver is being depleted from the Earth's crust right now. 6-7 years is what geologists give before all of the silver is completely mined from the Earth's crust. I mean, you don't hear these stories. Platinum, for example, the supply has been outstripped by the demand for 3 years straight now. Even though the prices are having a hard time, the underlying supply-demand fundamentals remain the same. And so, yes, I think right now is a great time to scoop up any of the metals.
And what about denominations for gold and silver? Are the quarter ounce and 10th ounce gold coins, are they worth the extra premium to have that divisibility? Or should we just stick to silver for smaller increments of wealth?
That's a great question. I think probably sticking with silver is better. Silver's always been money. Even in the it's ironic when you look in the Bible and look at the actual Hebrew word in the Old Testament for silver, it's the same word for money. They're synonymous, and so people have always viewed silver as money. I would stick with silver for the smaller denominations, and I would probably stay away from the bars for the majority of my gold. Although it's a lot less convenient having all of these coins, it really does make it much more divisible. It's hard to walk into a store and pay with a big brick of gold, for a box of cereal, but you could walk in with a very small silver coin and pay for that. So, yeah, I would stay away from the bars for the most part, unless you're really going in big and investing large.
And you wrote a book called Bankruptcy of Our Nation. Those are some pretty strong words. Can you just give us a real brief synopsis of what we learned in that book?
Yeah, whenever I got that book deal, by the way, it was kind of ironic. We were calling it the Bankruptcy of America, and this was back in 2007. And we were trying to get the book published. 2008, we couldn't find a publisher. And then in September, when the market crashed, suddenly everybody wanted the book. But they wouldn't call it Bankruptcy of America. They said, that's too harsh. We don't think that's what this is. They said, we'll call it Bankruptcy of Our Nation. I said, all right, it's fine. And the book really talks about what the 2008 financial crisis was about, but not like a dry, boring history of it. Instead, it's more of a kind of a culmination. How did we get here? And that's exactly what the first half of the book is all about. How did we get to where we are? How did we end up in this mess? How did we end up with $18 trillion in national debt? How did it end up that our money itself is debt? How did that happen? Where did the Federal Reserve come from, and what is it, and why is it bad? All of these questions are addressed in the first half of the book. And then in the second half, we spend a similar amount of time providing real specific, concrete, time-tested, proven strategies that people can take to protect themselves. And so these are all very much economically informed ideas and strategies based upon our forecast of what we see coming. And that is, of course, a continued decline of the U.S. dollar and a eventual crash in the stock market, which will either A, remain low for a very long time, or B, it will be reinflated by another round of QE, QE4, QE5, QE6, in which case we're really going to be in a bad place. And I think most people around the world at that point will begin to want to check out of a very bad system at that point.
Now, you said it educates folks on the Federal Reserve, but I mean, there's not much to tell there, right? Because I mean, that's pretty self-evident. I mean, Federal Reserve, it's the federal bank that belongs to the U.S. government, and they have this big reserve of capital in case we ever need it, right?
That's exactly right. That's exactly right, Mark. You win. You win the prize. No. No, and that's exactly what most people think. You're right. I mean, that's just dead on. No, of course, it's not federal. It's an independent bank, and of course, it's it doesn't have any reserves, but it does have a tremendous amount of power over the Congress, and this is not how the whole thing was set up and designed to be. Of course, it's an abuse of power. The Federal Reserve needs to be ended. We need to return to sound money. We need to stop the nonsense with this this fiat-based money, this fractional reserve banking. It's leading us down a path that is unprecedented, and none of us, no matter how prepared we are, I think are going to be able to fully understand how devastating this is going to be, not just to us economically. I don't think that's the biggest part. The biggest part, and we're already seeing this, and we predicted this in our book many years ago, that we would see a psychological impact Well, the psychological impact of this, Mark, is what's so devastating. As Americans begin to realize, wait a minute, what do you mean we're not the hope of the world? Wait, hold on. What do you mean that it's not, America isn't the greatest country in the face of the planet anymore? What do you mean? So it's this realization, this slow waking up to the fact that there are other people out there who are bigger than you and who don't like you. And now they have more money than you. So it's going to be a reversion to the mean. China, for the longest time, Mark, has been the world's empire. At the very height of the British Empire, even at the greatest height that they were at, when the sun never set, they were still smaller, GDP-wise, than China during that same time period. So China has always been the behemoth in the world. It's only been recently that they have become where they are now, completely devastated. And then now they've been raised up again, and they're rising right now, and nothing's going to stop them. So they are on this massive trajectory higher, and we are on this trajectory lower. And, of course, that's painful psychologically. It's hard for people, and I think we still have a lot of pain there as well, in addition to the economic pain.
And Jerry, where can folks go to learn all of this stuff that's had such a huge impact on this show and on my fiction books and on my personal finances?
Mark, I want to support the work you're doing, and so if anybody wants to come over and check out what we have, they can just simply go to your own website. It's right there on your website, prepperrecon.com/market. That's prepperrecon.com/market. If anybody comes over and checks out our website and decides that they see something that they like, we want to donate back to your website in exchange for that, because we really believe in what you're doing over there.
And tell us real quickly what some of the services you offer. What's a trigger trade, and especially what's market barometer? Because I think those are two really high value services that you offer.
Yeah, the market barometer is a real simple system. It's $50 a year, and it's basically a real time email and or text alert system that will alert you to whenever the market is beginning to start a new uptrend or a new downtrend. When the market starts a new massive or multi-year downtrend, that's something that you want to know, and you'll get instantly alerted on your phone or by email. And some of our subscribers, like to keep that, and anytime they get an alert, they can then call their broker, make any changes that they want to make. It's of course up to them. We don't tell people what to do with their money. We're just an educational service. But we have found that over time, our market barometer has been extremely accurate in getting us out. In fact, that's how we got out of the 2008 crash. And we're able to make money on the way down. We moved from long to short right at the end of 2007, and then got back in at the end of 2009 and have stayed in ever since. And so it's that market barometer is the reason. So the market barometer is a very powerful. It's only $50 a year. Then we also have a trading service for people who want to get a new trading idea every single day. We develop our own trading system, and this is great for people who have money in an IRA or people who want to just try to speculate with a little bit of money. Well, they can certainly do this with our trading service. Our trading service is designed to provide buy signals on stocks that should generate anywhere between 1 and 10% over the course of 5 to say 5 weeks, 5 days to 5 weeks. So it's a real powerful trading system for people who are looking for those short-term moves in stocks and maybe want to hold for a few weeks and, make 5, 6, 7, 8% on a stock. That's certainly possible with our service. So we offer many different services there, and they can get to all of them by going to prepperrecon.com/market.
And there's a new Follow the Money show every Tuesday?
That's right. Yeah, every single Tuesday we put out a brand new FTM weekly podcast. We cover geopolitics, economics, investing, trading, but have really been focusing a lot on geopolitics. And I'm sure as we get into the 2016 elections, Mark, it's just going to become ad nauseum as we have to listen to all the different candidates talk about why they're, but you know what a politician really is? What a politician thinks is wrong with the world is that he's not running it. And that's basically what all of these people are going to be telling us very soon. We've already seen Ted Cruz announce. We've seen Rand Paul is going to be announcing. It's going to be a interesting 2016, that's for sure.
Which I kind of like both of those guys. I hope that Ted doesn't get in there and split the vote for Rand, and then and then that's the reason that we get stuck with another Jeb, because I'm not voting for another Bush. I'm not going to do it. If it means the third term for Obama, if it means Hillary, I'm putting all my listeners on notice that we either get a real conservative candidate or I'm going to write in Ron Paul or Jesus or somebody. But I'm not voting for another Bush.
Yeah, Bush versus Clinton, it still could happen. It wouldn't surprise me. That would be a good signal to take a slow boat to Cuba or something.
Yeah, man. And politic, I think that comes from the Latin poly, meaning many, and ticks, it's a parasite, isn't it? So many parasites.
That's right. Yeah, good point. But yeah, people can check out our show every single Tuesday on our website, ftmdaily.com.
Jerry, thanks again for all you do in educating people, and thanks for making time to come on the show.
My pleasure. Thank you, Mark.
In the Days of Noah, Book 2, Persecution by best-selling author Mark Goodwin. A globalist conspiracy transpires by way of a false flag attack against America's energy infrastructure. Noah and Cassandra Parker witness a complete economic meltdown, which is intentionally triggered by the event. The assault is blamed on patriots and Christians who are rounded up into detention centers across the country. Noah and his friends must take action to prepare for the meltdown and defend against the totalitarian regime, which is gunning for their freedom and, quite possibly, their very lives. Get your copy of The Days of Noah, Book 2, Persecution for Kindle, paperback or audio edition at Amazon.com today.